What's up, guys? I'm Mike D'Antonio, founder and CEO of StockedUp. Welcome back to the Stocks with Mike and Tom show. We have a very exciting episode for you guys here today. The tech sector absolutely exploded in after hours with positive earnings from Facebook, Apple, and Amazon. So those three tech stocks absolutely exploded on earnings. Google kind of lagged behind and was kind of flat, or it was pretty flat overall. But Facebook really exploded, Apple really exploded, and so did Amazon. So they definitely really popped the market in after hours. So we do have a lot of important news to share with you guys in this episode, like how Apple is actually doing a 4-for-1 stock split. So that's important too. And at the end of the video, we're gonna be going over all the momentum plays and important news and everything like that for the market tomorrow. So with that being said, if you guys are new here, don't forget to subscribe to see our daily videos on your YouTube homepage every single day. So with that being said, Tom, what major news happened in the stock market today?
Yeah, there was some crazy news. All the four big tech companies all reported earnings today: Facebook, Apple, Amazon, and Google. Apple was, I think, the best riser out of all of them. With they did go ahead and announce a 4-to-1 stock split, which is amazing. So their price will drop down 4-to-1. So they'll be trading at around $100 a share, I believe, which they have done before in 2014. They also split and traded back down to about $100 a share. And we can see over the past 5 years, I know it doesn't go back to 2014, but you can see that they really rose from where they were around $89 all the way up to $400 a share, which is insane on Apple. And to see them split is just awesome for anyone who's holding Apple for the long term, because now they're going to have more shares at $100 a share, and hopefully Apple can hit highs again, of $200, $300, even $400 a share, which I think that they're totally capable of given their history.
Yeah, so guys, pretty much it's normally a really good sign when stocks split. It shows a lot of strength for the company. And when stocks split, they do it to make their share price more affordable to smaller investors. So Apple looks at it is, look at the valuation of Apple is going to stay exactly the same. So Apple stock is going to go from around $400 to around $100. So they're just going to take their current value and divide by 4 in late August. That's like when the actual split date is. I believe it's on August 24th or 21st or something like that. But they are splitting at the end of August, and pretty much their share price is going to be divided by 4, but the value of the company is going to stay the same. So pretty much a market capitalization, pretty much the total value of a company, is calculated by taking the share price and the total shares outstanding. So pretty much the share price is going to be divided by 4, but the total shares outstanding is going to be multiplied by 4. So overall, the value of the company is going to stay exactly the same. But overall, this is a good sign for Apple. It shows a lot of strength. Obviously, Apple is definitely a powerhouse. But by Apple splitting, everything's going to remain the same. So there's no like arbitrage opportunities or anything like that. But overall, it's a good sign for Apple.
Yeah, and another good company that had earnings that were actually on the upside was Amazon. Amazon also reported blowout earnings over $10 per share, which if we go on a 5-year chart, we can see Amazon has never really hit $10 per share in earnings ever before. And really the blowout earnings is due to the pandemic. Obviously, more traffic is coming through Amazon.com, and there's more online orders right now than there's ever been before. And the stock climbed about 5.3% in after hours, which is nice to see. And it's kind of consolidating now, but it was a very nice rise from Amazon. I know a lot of people were having a pretty bearish outlook on the market. And I think the market really likes to go against what people think a lot of the times. And really, these tech companies have been powerhouses, and they've been proving themselves through the pandemic. And really, this is why they're having decent earnings. But with Amazon's good earnings, we did see Google actually have bad earnings. They didn't have bad earnings per se. You can see they're still at $10 earnings per share, which is, they beat estimates by about $2 a share, which is pretty good. But the thing is that they had the first revenue decline in company history because the coronavirus pandemic is slowing their economic growth, and advertisers are pulling back spending right now. and they did during the past quarter, which is why they had to report the first revenue decline. So the revenue decline is just saying that, look, they just didn't make as much as the previous quarter. But that's not saying Google's going to fail. That's just saying that, look, they just didn't make as much as the quarter before, but they could definitely end up making more than that quarter the next quarter, for example.
Right. So yeah, Google is still doing great. They're just not doing like amazing. You know what I mean? So like, they're still up slightly on earnings, but that's why you're not seeing an absolute explosion like we saw with Apple, Facebook, or Amazon. So speaking of Facebook, what happened with them?
Yeah, Facebook says that the ad boycott that's been going against them. Obviously, a lot of people have been talking about how Facebook handles political posts and kind of like conspiracy theories and stuff like that. And really, a lot of people have been pulling ads from Facebook, and they said that it's been having an impact, but they said that it's not going to matter. Looking at their forecasts, and you can see that they still ended up popping, which is great for Facebook. This was one of the big poppers, just like Apple. Obviously, Facebook is not going to split like Apple did, but it's still a nice thing to see Facebook pop, even though all these companies were boycotting with ads. I didn't expect to see a Facebook jump like this with all those companies boycotting, and I don't think a lot of other people expected this either.
Yeah, I totally agree with you. I mean, I think this tech explosion really caught a lot of people by surprise, especially like you're saying with Facebook, with the ad revenue. I really think this whole earnings run or this earnings explosion, you could say, with these major tech companies really came by surprise. And, just like that $300 million options trade with the SPY puts that we talked about yesterday, like, I'm really curious, like, if they ended up shorting those puts or if they're still like holding those puts long. And, like if that's the case, if they're actually holding these puts long, like, it's definitely not looking too good for them. You know what I mean? Like the SPY is sitting around almost $327 each right now. I mean, I mean, that's crazy. You know what I mean?
Yeah, it's definitely crazy. I know I personally, I went ahead and, I fulfilled what I said yesterday, and I ended up actually grabbing a few contracts of SPY puts and, ended up losing the day on them, which, it wasn't the worst thing in the world. It wasn't a very large position. It was kind of a gamble, like I said in yesterday's video, but I was really hoping that those guys were really longing those puts. And if they were longing those puts, man, they're going to be seeing a big loss right now. I mean, probably like what I would say, I didn't look at the chain for the strike that they had, but I would assume they're at about, a 15 to 20% loss right now.
Yeah. I mean, and over $300 million. So
yeah, 300 million. So what are they losing? Like,
over 30
50
million.
to 70 million. I mean, it's crazy.
Yeah. So I don't know. I mean, there's a lot of variables, and like Tom, like honestly, like we saw Tesla run up on their earnings release, you could say, but by the next day they were red. So like, we might even see a reversal with tech, like Apple, Amazon, Facebook, and Google. Like it's really hard to say right now, but I think there's just a lot of mixed signals overall. We saw bonds running up recently. We saw gold running up. We saw, which are typically bearish signals. We saw large put positions with the SPY, and then we see tech run up. So like, I think we're just seeing a lot of mixed signals, but this tech run up definitely caught me by surprise. And, just given the fact that other tech companies have reported earnings and actually fell this quarter. And then especially with the SPY puts like we're talking about, with gold and the bonds, like I think it's just very surprising to see that. And, regardless of that, I mean, if we do see a continuation upwards with Apple, Amazon, Facebook, and Google, whether, as long as we see that the stocks like stay where they are after this run up, I mean, I think we have our direction. You know what I mean? We've been in this kangaroo market for the past month now, you could say, just up, down, up, down, up, down. And if we do see a continuation with this, I think we might have our direction.
Yeah, for sure. And like you said, if the direction's to the upside, that's just showing you guys that tech has really overtaken the stock markets, and that tech is the new king. I know oil used to be the king back in like the early 2000s, before the big tech boom happened. Oil was king, and then in 2008, I know oil was more of a big factor as well as financials. And now it seems like tech is going to be, the king of the market. So as long as tech stays up, the rest of the market should really follow suit. And I think a lot of these other stocks like Bank of America that's kind of been popping lately, and Warren Buffett also added to his Bank of America position. I think that these stocks that haven't recovered as much will start to actually recover more if these tech stocks stay afloat and they don't end up coming back down.
Yeah, I mean, either way, there's a lot of big moves happening in the market right now. But actually, hold on. Yeah, so Apple's at all-time highs right now in after hours. So overall, I mean, like I just said, if we see this continuation upwards and we don't see these tech stocks fall, I think we have our direction with the market overall, and that's to the upside. So we'll see what happens. So now with the Discord member of the day. So today's member of the day is Anji45. So this member has been in the Discord for a little bit now. He's been sharing a lot of very positive messages in the Discord chat. So thank you so much, Anji, for being very positive and respectful and, just sharing good vibes. So thank you so much for that. And now for the momentum plays for tomorrow. And Tom, I know you can probably already guess these, but the first one is Apple. So what
Yeah,
level?
Apple.
Yeah.
Definitely wait for them to break their high of 409 in after hours. They might even break it, within the next couple hours. And if they do break 409, then just go ahead and watch for 410.
Yeah, and then it's just a giant momentum play. Ride that momentum, and pretty much, if it does break the level Tom listed, which is 409, 409, 410, pretty much we will be looking at Apple in a bullish sense, meaning buying the stock or buying calls. With the next ticker, we have Amazon.
Yeah, Amazon, go ahead and watch for them to pop above 32.62. They are kind of a bigger stock, so they fluctuate around a lot, but just watch for that top of 3,262.
Yep, and then last but not least, we have Facebook.
Yep, Facebook, go ahead and watch for them to pop above 254, which was their high of today.
Yep, 254. So, I mean, overall, there's so much momentum with these tech stocks, and, there's going to be a big opportunity with them for tomorrow and then even next week. And then for today's unusual options activity, we are looking at the Qualcomm 110 strike calls that expire next Friday, August 7th. And there was about $1.25 million put into this position. The Qualcomm 110 strike calls they expire next week, August 7th. So overall, Qualcomm does have a ton of momentum. I mean, right now it looks like they're definitely longing those calls, Tom. What do you think?
Yeah, this momentum is crazy to the upside. Another tech stock, just beating earnings and then hitting all-time highs. And we love to see that with the pandemic going on. And Qualcomm has been one of those big chip makers, kind of similar to Micron, which is MU, and similar to Intel, which is INTC. But as we can see, Qualcomm actually crushed earnings to where Intel, which is INTC, ended up getting killed on earnings and falling from 60 all the way down to 48 where they're sitting right now. But Qualcomm is an amazing stock to the upside. I really love this, and the momentum is just insane. I would definitely think that they're longing these. If they were shorting them, I would think that they definitely knew something about it.
Right. True. And then honestly, Qualcomm kind of reminds me about AMD. We saw that huge run up. They beat earnings and are still running up. I mean, kind of looks pretty similar with the chart.
Yeah, definitely very similar, and it's pretty much the same sector. They both are chip makers, and they're both leaders in their sectors, and it's just amazing to see both of these running up. And I definitely think that Qualcomm could follow in the same footsteps that AMD had.
Yep. And then so now with the comments from the previous episode. So we have Andrew saying, hey guys, where are you getting that information about 50,000 contracts a day? Where can I view that? Thank you. So Andrew is referring to the unusual options trade from yesterday. So Tom, if you could pull that up. But overall, you can see that when Tom pulls this ticker up, we are looking at, here, he's pulling it up right now, but we can pretty much see order blocks. You have to put the period before it, Tom.
I know.
Yep, and then pretty much there's volume blocks of 50,000 contracts each day. So you could see right behind the price action, you could see that there are those little volume bars with 50,000 contracts each. Those blue blocks, each one of those is 50,000 contracts, except for the last one, which is all the way to the right, which is about 25,000 contracts. So pretty much you just have to plot the SPY 290 puts that expire March 19th of 2021. So That should answer your question. Amazing question. With the next comment we have, let's see. With the next comment we have, let's see. Okay. With the next comment, we have Blue saying, hey guys, can you make a video where you explain what is the free float market cap, free float, shares outstanding, volume, average volume, lot size, etc. I bet most of us will appreciate it. Thanks. So yeah, absolutely. We can definitely make a video on that. And so obviously we're going to make a video on that soon. But for the time being, you can check out a site called finbiz.com. They have all that information and data for you. So if you ever wanted to look up the float of a stock or the shares outstanding or anything like that, all that data is available for you for free. So you can see with Apple, you could see like the float, the shares outstanding, the short ratio, the earnings per share. You could see right where Tom's cursor is right there, the shares float, shares outstanding. They have 4.3 billion shares available for trading, and their market cap is sitting around, what is that, 1.67 trillion, Tom, all the way to the left?
Yeah, 1.67 trillion, which is insane.
Yeah.
Obviously, everyone's been talking about Apple being one of the $1 trillion companies, and they definitely deserve it with all the innovation they have.
Yep. And then with the last comment we have, let's see. The last comment we have Keith saying, it's been a while, Mike and Tom. You guys continue to school us, and I appreciate it. Question, what do you guys think of DDOG? So what do you think, Tom?
Yeah, DDOG looks pretty good. It looks like, they've had a pretty solid run up. They're called Datadog. I don't know anything about them personally, but it looks like there's some type of tech company that works with data, maybe like a cloud service company, which would be fantastic. But it looks like their chart is awesome as well, and they have a lot of momentum to the upside, especially over the past few days. They have 5 green bars in a row, which is nice to see. If we go to an intraday level, they're up in after hours. So they definitely have the momentum, and I think that they could continue upwards.
Yeah, I've never heard of this company either, but they did IPO pretty recently in late 2019. They IPO'd at around $40 per share, and right now they're sitting around 92, and they definitely did well after the March lows because of COVID. So they're looking pretty good. They look like a long-term hold. Like I said, I've never heard about them. I don't know what they do, but just based off a technical standpoint, they look pretty solid.
Yeah, but they do have earnings coming up, so that would be the only thing I'd be a little wary of on August 6th.
Yep. So with that being said, Tom, do you have any last-minute stocks, options, or any insight for tomorrow?
Yeah, my insight is going to be QQQ. I really like this play to the upside. Of course, it's going to be up in after hours right now, just like it is. But if you guys didn't want to play options that were overly expensive, like on some of the Apple ones and some of the Amazon ones, you could play some QQQ options, which could be a little cheaper for you, and they could possibly move a larger percent. And obviously it's gonna go up the same as the tech stocks. So really just ride that momentum with the tech stocks on earnings tomorrow, and I'll be looking at QQQ calls.
Absolutely. So yeah, there's a ton of momentum in the tech sector right now. Apple's approaching highs again in after hours. Amazon flatlining a little bit, and then Facebook, flatlining, and then Google. Let's take a look. Yeah, flatlining, but overall, Apple's really popping, and it's definitely interesting to see how they split their shares again. So that's it's good news overall for them. We'll definitely take advantage of it to the upside or the downside. So with that being said, if you guys have any questions, let us know in the comments down below. Tom and I really appreciate all of the support you guys give to the channel through the form of hitting that like button, commenting, and subscribing. It really means a lot to us. It only takes like 2 seconds. So thank you guys so much for hitting that like button, subscribing, and commenting. Like I said, if you guys have any questions, let us know in the comments down below. Other than that, thanks for watching.